But what always happens is no one is proactive about their own financial situation. No one wants to do anything to improve their situation until they experience enough pain. Pain is the key, financial pain. So when they experience enough financial pain, then they'll begin to move. Until that happens, generally, they aren't proactive. Well, what this will lead to eventually, I think within about 3 years, silver will continue to grow, but I think in 3 years, you're going to run into a political situation where inflation is so bad, our international trading partners are going to require us to back a portion of our bonds with hard asset. Now, that hard asset could be in a lot of things. That hard asset could be in coal, it could be in commodity trade, it could be in copper, it could be in other minerals, but most likely it's going to be silver. The U.S. would never agree to use the gold supply, but silver is plentiful and demand for it is high, and you'll see other countries before the United States begin to go to silver coinage. I think you'll see India go to it first, perhaps. You'll probably next see maybe China go to it. And could be some countries in the European Union. I could see the ECB perhaps going to a more stable commodity currency like silver. Don't forget the British pound is called the pound sterling for a reason. It used to be you go into the bank and you give one paper fiat pound and you get pure silver, sterling silver. So that's why, as you know, you're British, they refer to the British pound as pound sterling. That's why. It used to be that way, it's not anymore. You go to the bank, you say, I want, sterling for my pound, they're going to say, wow, that's nice, I'd like to have some too, but, can't help you there. So, anyway, back to the silver letter. A lot of these things that we see happening are fairly predictable. If you look at what we're experiencing as a nation right now, there's so much what I call noise. There's so much noise in the system. It's hard to ferret this out. What we have to do is back up on a macro basis and just ask ourselves, if we close our ears and just open our eyes, what do we see happening? Don't forget, our trading partners are our largest creditors. 75 years ago, we were a creditor nation. Everybody owed us money. Now we're the biggest debtor nation in the world. So it simply means that all China or India or the EU has to do is just ask us to back up our currency or our debt by a modicum, maybe 10% of a hard commodity. That's the beginning. That's the beginning. And you'll see it happen. They're talking about it right now, Mark. You'll see it happen. When that begins to foment, it's like a snowball running downhill. It'll start at 10%. It'll be 20% in a year. They'll make us put up maybe 35 or 40% of our debts in a hard commodity asset. That's the beginning of the silver move back to $50 an ounce. And it'll get closer to that 25 to 1 number or 30 to 1 number where it was historically, that is the gold to silver ratio. It'll get closer to that rather than where it is now at 65 or 70 to 1. That won't last. And if you want to buy a commodity You want to buy it when it's cheap. You want to buy it when it's unpopular. You want to buy it before it begins to move. But what always happens is no one is proactive about their own financial situation. No one wants to do anything to improve their situation until they experience enough pain. Pain is the key, financial pain. So when they experience enough financial pain, then they'll begin to move. Until that happens, generally, they aren't proactive. But it will happen. And if you think the financial pain is over, it's just beginning. Seriously, it's just beginning. Over the next 2 years, you're going to see a huge movement in commodity prices, a huge upward swing in commodity prices. It's going to happen. Silver is going to lead the way. That's what we believe. This is still January, but we'll see what the price of silver is in December. And I'm saying it's going to be at least $25. Now, 3 years ago, I made predictions on gold. I bought an awful lot of gold at $682 an ounce. That was only 3 years ago. Then I was telling people 15 months ago to buy gold at $800. And my friends and neighbors here bought gold at $820. Okay? That was 15 months ago, $820. Now, I know gold has come down the last few months. I know. The last 3 months, gold is off 12%. Okay, sorry. Just wait another 3 or 4 or 5 months. Gold's going to make a new high. It's going to go right past $11.50 an ounce or $1,200 an ounce. It's going to. Silver will too. Eventually, silver will move faster than gold. It certainly will percentage-wise. If silver goes from 17 to 25, that's a 50% move. Gold would have to go from here, gold would have to go to $1,500, $1,600 an ounce for a 50% move. But I think that may happen too. But you can buy a lot more silver than you can gold for the same amount of money. So, I think silver's the play.